Real Estate Rewired.
Welcome to Real Estate Rewired with Gus Wade. It's AI with a heart. This is a show where we're talking to over 100 real estate professionals in the real estate space. What's working, what's not working, how are they using AI, and most importantly, are they having fun doing what they're doing? And today is a really interesting guy. We had a chance to talk. I'm talking to Zack Dane of Revolve Real Estate, and you have a unique take on this. So tell us what you guys are doing.
Yeah, absolutely. Thanks for having us on, Gus. Glad to be here and obviously be able to share the information that we've done. Real Estate Evolved, or simply Revolve, is from a high-level view, simply fractionalizing real estate ownership of income-generating real estate. We're creating a digital platform to allow people to buy, sell, and trade fractions of real estate ownership anywhere, anytime. That's kind of the key goal. Obviously, with AI coming on and looking at it to go, how can we introduce this to a new generation? Part of it is really looking at all of the aspects of, the current situation we're in with the real estate market and going, how can we effectively bring in and introduce kind of a revolutionary new product for the everyday layman?
So here we go. I hear all that stuff. I get scared, right? I go, oh my God, what the hell is he talking about? So yeah. I'm sure that happened. So give me your sort of evolution. How did you get into real estate? Where did you pivot from? And then, explain it to me like I'm a third grader, exactly where you see the benefit or where the problem was that you're solving.
Absolutely, 100%. So I'm originally born and raised in the Los Angeles area. I moved to Colorado for opportunity, which is kind of weird. People don't move east for opportunity as much or as often. But for me, it was, how do I get into passive income real estate? So when I moved, I got into property management, started working for a firm, built it up to about $70 million in the Denver metro area under management across 200 doors. I got a house myself. I was able to get my next home, have a rental property, and these sorts of things. So I was very entwined into that passive income investor world. I got into car sales for a number of years, and that's kind of what opened my eyes to obviously the problems that we're having. And I'll kind of address that here in a little bit, but we got into the car industry. And then, about 2.5 years ago, I really got into, well, how do I expand on my portfolio, right? Can I leverage my rental property? And rates were too high. The cost of money was too high. And so from my years in the management and everything, I thought about, what about co-ownership, right? And we think about it all the time. Real estate investment groups, they exist. It's not a scary thing. Real estate investment trusts, right? These kind of syndications or groups. But the problem became, how do I find 100 people that would want to buy in on a rental on a house, and how do you manage all of that? And so really what kind of became born was with Revolve was the ability to go, can somebody buy, sell, and trade pieces of these shares of ownership? How can they be exposed and brought in? And we really went, could we build a blueprint for a better tomorrow? Could we tell people that there is an alternative to owning real estate collectively as opposed to individually? Because for me, the cost of expansion, or even the general layman to try to buy a house or buy a rental property, it's a $500,000 loan. It's this, giant and cumbersome thing, as opposed to being like, well, what if for $500 I could own a piece of a property that generated income? Now we can learn how to own a whole property. I'll never tell you not to own a whole property, but if you could start somewhere, where can we foster education? Where can we really bring the next generation of buyer and tell them that there is a way, that there is some steps to the process? And that's really what triggered this whole idea of going, if we use a collective ownership model, we can use some new underlying technologies and just really make it basic for people to go, you own a piece of this rental property, it pays you monthly dividends, and now you can kind of diversify and do a few things on some very, very basic terms. But we found the problem, couldn't expand, couldn't do it ourselves, cost of money, and then we started to realize lowest number of first-time home buyers ever recorded, lowest number of individual investors like you and I, when it comes to single family homes and small multifamily, right? Then we look at liquidity issues. We look at, how do I buy stuff outside of my current market or where I currently live. And so that's what brought it all together to go, we have a much bigger product than just, hey, co-ownership, I'm trying to buy some more real estate, whatever. It went, could we speak to a generation? Could we get the, the people in their mid 40s who have a few extra bucks and just want to buy something past the home they live in? This is that opportunity.
So now I get it. So there's two things that pop into my mind. And we had talked about this a little bit. Property management is a huge pain in the ass, right? I mean, it's snowing, my boiler doesn't work, the window's cracked, the crazy lady with the 8 cats, I mean, whatever it is, right? So I'm assuming that you've sort of solved, right? I mean, isn't that most people's fear? Or some people have that fear. Either it's going to go down in value and I'm going to be underwater. There's going to be some 2008 is going to happen again. Or like, I don't know how to deal with people who are problematic tenants, or they go belly up, or COVID hits and now the restaurant's not paying the lease. So how does this solve that problem?
Absolutely. So we offer a turnkey service. And the way we're starting this was we want to eventually build a marketplace that allows realtors and other people to list homes in a lot of ways like Airbnb, right? Where you can list it, you're the agent, and then if you want to manage it, you can, or we can hire a management company on your behalf and oversee that process. But what we looked at was going, there's two things behind this. Number one was turnkey. You want to be able to sit on your couch and buy real estate. That's what I wanted, Gus. I wanted you to be able to $1,000 here in Denver, another 1,000 in Baltimore, whatever. You just buy, just enjoy being able to buy these little pieces. Maybe one cool one in Miami, who knows? But that came down to, well, how many people are willing to buy a house in Miami and get management? That's a very, very complex process. So one of the things we offer is the elimination of that. Again, turnkey. But the other thing that came on with the whole management side of things was, if you can make it so simple that people are understanding what they're what's going on, they'll buy fractions of the home that they live in. Now we've been able to convert the tenant into an owner themselves and hopefully be able to bring up that care, that level of, I own a part of this, therefore I want to take care of it, right? So we kind of went on this little idea of, well, we could manage it, but could we make the tenant feel more responsible as well, and thus kind of cool the worries of the token buyer, the fractional owner, right? But for us, another factor of that was income generating real estate. I didn't want to have to ask you for money to fix the roof or the door or anything else. So we buy properties that are less than 10 years old or newly built, knowing that the water heater, the furnace, these things aren't just going to go out sporadically, right? Because they're in that good, useful area. So now I won't have to go to people and say, hey, I need money to fix the furnace and the roof and all these other things. We either come into properties that have been completely renovated, so now we become an outlet for flippers, or we go to builders and they can list their inventory, and as it sells and it moves, we manage it, rent it, and do all those things. After a 10-year cycle, we sell the house off, so that way investors can then enjoy 1031 exchanges and things like that and really be able to capitalize on it. But yeah, turnkey, income to cover expenses and repairs, and that just kind of long-term peace of mind.
Well, that's interesting to me. The idea of tenant ownership, right? Mm-hmm. Because even if it's a small piece of it, and it's interesting. I rented apartments in New York for 20 years, and one of the things that was really interesting to me is the more renovated the apartment was, the better care the landlord took of it, the better the tenant took of it.
Yep.
And if they kind of move in and it's already a little bit banged up, it's like, who cares, right? They're not that invested in it. But you brought up something which is interesting and talk to me a little bit about the tax benefits, because I know that, I don't know the exact, but I know that if you sell an investment property, you have to reinvest that within a certain period of time. So it sounds like your system eliminates that danger of being caught short. Like, hey, I sold this thing, but there's really nothing to buy. Explain that to me a little bit.
Exactly. So the 1031 tax exchange was created so investors could pass along their tax obligations, right? So if I buy a $100,000 property and sell it for $200,000, any profit that I made, as long as I don't pocket that, I can roll it into another rental property of equal value, or I can spread it out across a few properties, like which we weren't allowed to do. But more importantly, it has to be done within 6 months. Mm-hmm. Okay. Now, you also have to own the property for at least 12 months, usually up to 24. And then it has to be for passive income purposes. It cannot be, you're using it, you're half living there, you just moved out, now you want to try to 1031. It doesn't work that way. So what we've been able to determine is, because we're using direct co-ownership, your fractions are equal to the equity of the home, right? There's no lien, no loan, no nothing like that. So when we sell the property, that taxable event can be carried over into another new property that we just brought onto the market. So you can keep that cycling, right? Now we're working on, if you sell a fraction to buy another one, right, and the underlying property wasn't sold, you're just selling your shares, that may not be 1031able. Mm-hmm. But if somebody sells a house in the real world, like they have a rental today, they sell it, they could come onto our platform and then put that income into multiple different properties across the United States, and still that would be deferring their taxes. Another tax benefit, well, there's two more. One is passive income. So all the income that you're making on this is going to get hit at 15% or whatever passive income is. It's not primary income. And you get passed through depreciation. So when you own a rental property, you get to write off the structure or the house over the course of 27 and a half years. When you own a fraction, you get your share of pass-through depreciation on your account. So not only are you paying passive income tax, but you're also reducing that with pass-through depreciation. Plus, if you sell the property sells, you can just reinvest that and not pay taxes until you finally cash out in the end. So when we look at the tax benefits, they're just outstanding. And beyond that, real estate, let's say you had a portfolio and got a loan against it, like a home equity line of credit, a HELOC. If you do that, you can write off all of that interest. You can write off all of these things. So in so many ways, real estate is one of the biggest, not only wealth building tools, but most tax advantageous things that you can own.
Sounds good. Now, another question that popped into my mind is, when did private equity, Blackstones of the world, really start getting into purchasing single-family residential homes? When did that game start, and how has that affected the housing market and what you guys are doing?
Yep. So that got really big in probably about the last 15 to 20 years. They saw these huge opportunities in the post-08 crash with REAs, or real estate, or REOs, bank-owned properties. And it's really interesting how people go to that, because it's this giant, like, oh my gosh, they're doing it, right? The reality is that, and I mentioned this earlier, one of the statistics that we found is individual owners like you and I own 87% of the single family rental homes in this country. Okay. So most single family rental homes are owned by people just like us. BlackRock, or Blackstone, I think BlackRock specifically, owns just under 1% of the total inventory of single family homes in this country. It's about 200,000 homes that they own or manage. Most people, the hard part to wrap your mind around with BlackRock or Blackstone is they typically give a massive credit line to a broker who goes and buys these properties, right, and then manages them on behalf. Like BlackRock's typically the line of credit. One of the things that we saw was, and this is just like to your point, was BlackRock, Blackstone, because they're coming in and they're doing this, rents are going up, right? Supply is littling and all of that. And that's directly correlated to the cost of money. Okay, so what's happening isn't so much that BlackRock is driving up rents. Interest rates are coming up, and BlackRock needs to cover their expenses. So yeah, they're raising rents to be able to kind of feed the giant. There's a great book called Fixing America and the Economy. It's by Scott Smith of C Squared Fund. Really smart guy. He's been a great advocate of ours. And he raised $1 billion fund to generate a loan product back in the day. I don't remember exactly what it was, but more importantly, he talks about in his book that 2/3 of rental income goes to the bank or taxes. So the bank and taxes get 2/3 of what we're talking about. Now with our model, we buy the property cash and sell off the fractions. So the actual owners own the equity. There's no loan, no lien. The property's not, leveraged in any way. So what we can offer is the ability to reduce the rents. But when I hear about BlackRock and all these other guys doing all this crazy stuff, they're doing it because of what's happening in the market, not because they themselves are malicious, right? They have to make their dollar, and that's what's rising, rates and things like that. You can go down to Texas and a lot of the Bible Belt, and there's a ton of single family new builds available to buy. Why aren't they scooping all of those up and turning them into rentals? So there's more to the story than just them, going after it.
Got it. So here, I guess this is in my brain. Tell me if my brain is working correctly here. You guys buy a house for $500,000 in cash.
Yes, sir.
Right? You go out and there's 500 people that put in $1,000 each.
Boom.
And now I'm a fractional owner of 1/500th or whatever this is. I'm getting the tax benefits. I'm getting the depreciation. Now you guys are renting it out, and because you're not paying interest on that money, your return on your rent is a lot more because you're not servicing that debt. Is that accurate?
Cap rate becomes cash flow. That's the big term we go after. And so, if you imagine that you were paying the property management company and then obviously escrow, which is taxes and insurance, the rest of that, instead of going to a mortgage and going to the bank, is going directly into 1/1000th. You're getting, 2 portions of that income, or you can buy up to 99 pieces of one house, right? You own 9.9%, no more than 10%. I'll tell people you're better off owning 1% of 100 properties than 100% of one. And the reason is portfolio diversification. There's so many reasons why. But to your point, you own a piece of that. But the great thing is now, because you own that equity, you can go get a HELOC against that. And the bank is going to go, we'll give you 80% LTV. We'll give you the same terms that we would on a full rental, on a full house, right? That's the idea, is how do we take the big picture and just make it small? And because we can use blockchain to allow us to buy, sell, and trade, but also record those transactions, now what we've done is partnered with a lender who can digitally put liens on these fractions. So just like a real life property where they put a lien or a mortgage on it, same thing, except you own your equity in your fractions. You can get loans against your whole portfolio if you want to. And just like if you owned a rental property free and clear in cash, you have that same equity, that same power, that same everything else in your shares of ownership.
Got it. Now, let's go to the scary word, the blockchain.
Buddy.
Let's it's interesting. So, give me a basic overview of what it is, why it's your preferred vehicle for what you're doing, and what are the dangers of it, or what are the misconceptions? What are the dangers and threats to it, and what are the advantages?
Yeah, great question. It took me about 2.5 years to kind of figure that out. When I got into this, I was not a blockchain person, not a crypto, not an NFT, none of that. I was a real estate guy. And I had somebody tell me, they go, with these NFTs, these little pictures or whatever they are, people can own them, but you can make payouts through them directly. They can hold a bunch of data. There's a bunch of stuff these little things can do. Well, for me, it took a long time to go, how does a picture of a little pudgy penguin or something equate to a house? How do you cross that bridge? And the reality is that blockchain is the underlying vehicle. It's like the internet, right? They're the roadways that these things work on. Crypto and NFTs and all that, those are just little cars and stuff that run on that highway. And so the underlying asset or the underlying technology of blockchain is incredible because it's the greatest ledger system ever built. But what it does for us as asset managers is say, Gus, you have a fraction of your property. You want to sell it to your friend. The next month I make a payout. I just pay out directly to the digital asset. So it's already sitting in his account. So he gets the money, right? So we looked at this to go, wow, if we can have a ledger system that you now can be confident I'm buying this fraction of a 1% of a building in Milwaukee. I can see how many times it's been paid out. I can see actually how it's cash flowing. I can see its ownership and that it's only one of one. That to me was so important to go, now we can do payouts, people can trust it, and it can all be recorded on chain. The scary thing becomes that a lot of blockchain and stuff is public ledger. It's publicly available. So people go, well, my information could be publicly available. This is where AI comes into the game, because right now, when you go onto a website or you're trying to buy something, and mortgage companies are using this all day long, it's called KYC, know your customer. You take a picture of your driver's license, an AI picture of yourself. That's some pretty hardcore personal data to be holding on to. So if we can use a third-party company that specializes in that, then they can hold that data while everything else is done on blockchain. Your information is separated from what's happening over here and and where your personal information is stored. Then you take AI to connect the two. Right? If you need a tax document, great. Let me see everything that user 1123 has done over the year. Connect it with their personal information, produce your tax document on January 1st for you. So we saw blockchain as going, you can do anything and everything at your discretion, anytime, any place. It's all connected. Your personal information isn't going to be out there on this public ledger. It's just the property, the payouts, your unanimous username, whatever. And then from a security gap, we use AI to then connect everybody to provide the proper documentation and all that. So we take the scary part of hacking and your, personal identifiable information and try to break it away. But for blockchain, it's the greatest ledger system ever built. Pass-through depreciation, all of that stuff can be calculated instantly and provided to the customer.
So is that proprietary, that AI that you're utilizing, or is that, to connect the anonymity of the transaction to the personally identifiable information? That's your technology that you guys have created?
No, that's why I'm talking to you, man. We got to get something going here. So
Oh.
We're still shopping AI. We know it's possible, because the other thing we want to include is AI trading bots. That's a big thing as well. So we see what AI can do, right? Education is a huge thing for us because it can teach people how to buy, sell, trade real estate. When we're talking about personal data security, that's a huge gap to bridge. Mm-hmm. And then documentation and communication. We talked about, I think I mentioned this when we spoke, last week. It was property management companies spend 44% of their time on inefficiencies and maintenance requests. AI can bridge that gap by giving the tenant an update, by giving the property management company an update, by giving the vendor an update. And now what you've done is created this cohesive ecosystem of communication between the owner who wants instant information or their updates, and same thing with the tenants who just want to know when the plumber's coming. So I see it as going, there's so many pieces to this, more than just security and data and connecting that. Another thing we looked at was we had one of our one of our advisors from our advisory group, sorry, I couldn't figure that word for a second. He was talking about, I want to set an AI trading bot based on some guy's theory on real estate trading and let it trade and day trade fractions of real estate for me. Cool. Awesome. What if we had the Grant Cardone, AI bot? What if you had the, Andy Elliott, whoever, who's the next big person to come up and do real estate? Could they create their own little trading bots? So we see AI doing so much for us, but that go ahead.
Yeah, I was going to say, so before I forget, here's the interesting thing. It seems to me that the misconception or the reality for most people is, hey, I can't invest in real estate. I mean, you got to come up with $30,000 down payment on a cheap thing, and then I got a loan and the cash flow, and what if the tenants don't show up? So this to me feels like an incredible educational opportunity for people for $500 or $1,000 to say, hey, I'm now a real estate investor, and they begin to see those returns. and all of a sudden, like the bell goes off. I'm kind of getting off topic here, but I know in New Jersey in the last couple of years, and I don't know why they didn't do this, because it's shocking to me that school does not teach basic personal finance.
Yeah. Yep.
They were going to put $5,000 in an account for every child born in New Jersey, regardless of income or anything. Every kid gets $5,000 in a retirement account.
Yep.
And basically the idea was, now maybe someone who doesn't have financial intelligence, hasn't been educated, looks and goes, oh my God, there's $5,800 in there. We didn't do anything. Geez. Now they're being educated. Listen, if you put $25 a month in and it returns its average of 7%, by the time this kid's 65, he's going to have $2.5 million. Oh my God, let's go ahead and start putting some money in there. Do you see what you're doing in the same vein of people getting excited by the possibility of recognizing that real estate is a quote unquote safe investment?
Yep. So the way we do that is we don't call it an investment.
Okay.
Is we say buy, sell, and trade real estate on demand. Our generation doesn't care about investing. They want to buy, right? People want to buy, they want to own, and you make it that. But the fact is, I own this house or a piece of this. Like I joked, I go, how many more dates would you have gotten if you said I buy, sell, and trade real estate, right? They don't know it's $5,000. People think it's, it could be 500,000. Like, what do you mean you own real estate? This 23-year-old kid, right? And it was funny you mentioned $1,000, but we did an internal survey of about 20 people and found the average person would spend $12,600 on our marketplace. And that's from people $500 or, 20 to 30K, right? So we see this very wide opportunity. But yeah, to your point, financial literacy is I don't say non-existent, but if we can kind of get to these kids and go what I get worried about is that kid turns 21 and the account's worth $20,000 and he turns around and uses it for a down payment on a car, right? It's how long is he going to sit on that till he's 65? Or are they going to look and go, I got cash in the bank to do something with it? We're human. We're inherently, that's just what we do. I mean, I think the U.S. spends enough cash to make up the 18th largest economy in the world just in cash. It's pretty crazy. But yeah, education will be a very formidable thing.
So let me ask you this, Zach. So how do people make money? Right?
Yeah.
Do they park it? Do they trade it? How do people make money and what kind of money are they making?
It's the same thing as if you were buying and selling whole properties, right? It comes down to it. I'll probably make 4 to 5% on appreciation and 5 to 6% in cash flow, right? The idea is to get that 9 to 11% that typically real estate does for you on a regular basis. But rather than having your monthly mortgages eat up any sort of potential cash flow because the cost of money is just too high. Trust me, I've done the numbers. Could I hunt for deals? Could I, really get in there like the top guys tell you to do? Absolutely. But is it worth my time? I'd rather just do it from my couch and make it an easy experience. But yeah, returns 9 to 11%. The really cool thing is, let's say you're here in Colorado, we've been seeing some very good, appreciation in home ownership and, appreciation value, but the cash flows have come down. But if you go out to Iowa, appreciation's not great, but cash flow is like 8 or 9%. So we look at going, where can you get into and how can you diversify? So money wise, yeah, people are getting their monthly returns because, the management company pays out. And then with blockchain, they're just distributed. No questions asked. We use a stable coin. It's super easy. You wouldn't even know any difference between, I got cash in my account or not. But it's funny real quick between the term investing and buying, I've broken it down. And really when people think about buying something, right, versus investing, it's no different than if two people walk into a coin store and buy a gold coin. One guy flips it to his friend for 5% the next day. The other guy holds on to it for 20 years. What was the intent is really in the hands of the customer. So we stop trying to tell people, it's 10-year appreciation and do this and do that, and just say, hey, what would you do with it? And, people have different flavors. People flip houses, people buy and hold, people short term, people like multi-units, some people there's just so much out there. Why not give people the product and let them figure it out?
Got it. And talking about AI, what about predictive analytics in terms of which rental markets are heating up? And you know what I mean? How do we determine, or how do you utilize AI in that arena?
Yeah, so our next one of our big projects we're focusing on, and this will be obviously as we kind of build up through our investment stages, but we want to focus on building an RVM, a real time valuation model, as opposed to an average valuation model. So Zillow, Redfin, all these guys, they'll use what they call an AVM, average valuation model. And for us, we want to provide customers with the most information. So I want to give you Zillow. We have a book price, right? Like this house is worth this number today based on Zillow, Redfin, and all these. And then ours, right? Our real-time valuation model based on maybe commercial, maybe like here, the Broncos announced they're building another stadium and real estate in that area shot up. Right. So we looked at that to go, well, could that be an idea of if we had all the right pieces and AI can gather all that information? The other thing that we noticed is if you want to create secondary market speculation or some sort of market pricing on this, like for instance, you have some stuff in Baltimore, we need news. You need like if you think about the Jim Cramers of the world, right? They're the ones who keep stocks moving on a daily basis. Well, how do we keep real estate moving on a daily basis? Well, let's utilize AI to keep all of the current data, like, lawsuits. In Detroit, there was a company called Real and they were doing crypto blockchain, and they didn't own a bunch of the properties. They got sued by the city for blight. There was a whole bunch of stuff that happened. How would that affect the general area knowing that a landlord just had 600 properties repossessed? So I want to look at it to go, there's news on top of just, over the last 30 days, this many homes sold and blah, blah, blah. No, we want real-time data, and that's what'll drive your market speculations, but we can use AI to really hone in on specific areas.
And specifically what I'm thinking about, have you played around with deep research at all in ChatGPT?
Not too much. It was kind of my next step.
Zach, here's it's just phenomenal. So basically, and now they have it in Gemini, and now they just released 5.2. But the idea was, I went in, for instance, and I said, hey, I want to do a deep research on what are the top 1% of brokers doing in the United States that the other 99% are not doing. And you watch it, and it tells you, okay, I'm going to Zillow to read the blog. I'm going to the Keller Williams. I'm going to the company. And okay, I'm going to read page 186 to 182. And it created a 40-page report on metrics, specifics. So I'm just thinking out loud with you in terms of really identifying what are the hidden movers in a real estate market, and how could you set up a predictive analytical model that not only just takes the basic data that everybody has, but then, like you said, goes into the next layer. I know that, for instance, there was one company, gosh, it just struck my mind. They basically figured out where the government was going to spend money. And they said, okay, there's an infrastructure project going on in the Bronx. They're building a new subway station. Guess what? That's where we're buying. We're buying anywhere infrastructure is going in, because that's going to regenerate the market. So is that the kind of thing you're talking about?
It's funny. I had a guy who said he buys where they're building Home Depots. So he gets information from CoStar Group, who's, they own homes.com and all that. And he gets the very hey, where's Home Depot going to be built? Because that means they know homes are going up. And absolutely, we see that. We see predictive markets as being something exactly like you said, a prediction. And that's why we talk about the Jim Cramers of the world, because they're constantly predicting the value of a company. Book values on companies come out quarterly, right? So why is it that we have a stock market that trades daily? Shouldn't it be more quarterly than it is? And so when you talk about predictive markets, you talk about that news. It also can be, fluff. Right? Is there stuff that we look out there to go, maybe that's just dead data that really doesn't mean anything. It doesn't mean that there's 5 new wheat farmers that all of a sudden the brewery is going to take off down the street, right? Because now they have access to all this wheat. So we'd have to really hone in and find out what information, because as much as we love AI saying that, this is what the one top percent is doing. Well, that's what it's getting from Keller Williams and from all these guys and what they're saying that they're doing. What I believe. Go ahead.
I was going to say, Zach, you're absolutely spot on, because the reality is, and there might be a whole market for this in terms of kids coming out of college right now, is actually confirming and verifying the information that's created, because you can't take any of it at its face value. You can't
Yep.
you can't just create it, send it out, and go, hey, this is reality. There really is then the process, which is interesting, which I did, was I literally interviewed the managing broker for Compass in Manhattan with 3,000 agents and said, okay, tell me actually, what of this stuff are you using? Why did you do this? And you really do have to have that human element in it. Otherwise, it's just AI slop.
It is. And that's the problem is like, I think Peter Thiel talked about that very much in his book, 0 to 1. He talked about the human element of when he was building PayPal of trying to find fraudulent transactions, right? And all I did was red flag them so that a human can then look at it. Right. So I look at it to go, at what point will AI tell you, hey, there's a problem. You need a human interaction, right? Mm-hmm. But you still need somebody on the other side to answer that red phone when the call is made. One of the things we talked, just real quick, I'll touch on, because I mentioned when I was in the car industry, I heard an entire generation saying that they'd never be able to own a home. And it was this wild concept where I talked to people in your age group and even my like later millennials to go that never crossed their minds. Like, of course I was going to own a home, And I really look at AI to go, is it missing a lot of the data when we look at the real problems in society today? Because I heard this from people I worked with, from kids who were in their mid-20s. And I'm like, yeah, I own, my house and a rental property, and here we go. And the 25-year-old kid's like, I'll never own a home someday. Mm-hmm. And then it makes us think about, well, a 50-year mortgage, is that really the answer? Heck no, it's not the answer. Let's be real here for a second. We need a new product. I found an interesting stat with real estate agents, and you might have found this one. Of inbound leads that they get, only 2% of those leads are closed within 6 to 18 months. 30% may buy, but from somebody else, and 60% were just clicking to click. That means 98% of your market base has nothing. You have nothing to sell them. So why not try to sell them fractional real estate and get them in your ecosystem? But when we talk about that, right, it comes down to a level of trust. Would you trust just your broker? Would you trust just your agent? Would you trust just Zillow? Like when you talk about the pricing of the asset and actually getting into it. So that human factor to me will always be there. You'll always need somebody to sell somebody on, hey, take the leap, take the step. But AI 100% can be at least the advocate to get you that information if the information's correct, right? And really get this next generation of people to come in and go, yeah, AI says it's great, it's awesome, it's easy, it's all those things. How do we connect that? But yeah, scrubbing the data, and people will, they'll push that envelope.
So do you guys do commercial as well, or just residential?
We're starting with single family residential. We'll work into like raw land, commercial, and all that. Our mindset was we needed to start with something that the general layman understands, and everybody understands that they can rent a house and pay the landlord. What if you could become the landlord? Commercial deals are big. They're hairy. There's a lot there. They're very advanced. And there's been a couple projects that have failed over the last couple of years that we kind of took notes on. And yeah, we'll slow step into that, but we really got to get people confident with our process of, wow, I'm sitting here on my phone in New York, buying a piece of a property in Colorado, and Zach's a real estate agent. I love this guy, and there's his picture, and I'll buy anything from him. Heck yeah, let's go. But yep, start there, build up.
All right. Couple of other questions. They're popping into my head. This is great, by the way. So, you hear the variation in the value of a Bitcoin. Does that factor into when I want to sell? Do I have to sell at a time when Bitcoin is high or low, or is that part of the equation?
It can be. So the reality is, if you own a rental property, it's the same thing. I've listed on a marketplace to sell. Could be high, could be low. Maybe the roof's falling off. I got to sell at a loss, whatever it is. It's kind of the same boat. The reason we steered away from crypto or putting out our own coin or anything else is because all that stuff is so volatile.
Yeah, exactly.
That the everyday customer is going, I want to buy a piece of real estate. I don't want to buy this.
Okay.
So we know single family homes are stable. They're everything else. We're using NFTs just to say, here's 1/1000th of ownership guaranteed, right? We know that for a fact. So with us, the value of what you're owning, of what you own, of what you bought, is equal to the underlying asset, which is the real estate. Okay. So you can't compare it to Bitcoin or the crypto side. Yep.
So basically if I invest my $1,000 in a $500,000 home, and the home value goes to 600,000, then I participate in that. If the home value goes to 450 and I choose to sell when it's 450, then I'm going to take a bit of a loss because I'm choosing to sell at a time that property is lower in the market. So what I also hear is the benefit of this is, listen, housing crashes happen, right? We all lived through 2008. The reality is if I got my $1,000 in there and it goes down 40%, then I leave it in there for 5 years or 8 years or whatever till it comes back up, because generally, historically, home prices rise over time. Would that be a fair assessment?
100%. It's more stable than commercial, which is another reason why we wanted
Right.
to do it. The market's in a very, very interesting place right now. We don't see a crash coming because you don't have a lot of the defaults that you had in 2008, which was driving those lower prices, those REOs. The banks had to sell them and get them off the books. So they were selling them for buku low prices. But right now, 2/3 of the 30-year mortgages in the United States is under 4%. When I was a young realtor and I was getting into the business, I heard about a guy he was an agent. He's like, I'm going to get the most listings. List with me and you'll get a flat screen TV. Well, guess what? He got the most listings, but everybody listed it at $500K over what they could get because they were getting a free TV. They knew nobody would buy the house, but they got a free TV for listing with you, right? List it for $1 million. It's worth 300, so it's that kind of mindset right now where a lot of the houses, even though there's a ton of inventory on, people don't need to sell. They're not twisted. They're not like underwater. There's not this whole problem. So to say that there's some magic crash going to happen, but again, historically, has it happened? Absolutely. But single family rental properties tend to bounce back. They tend to be historically more stable. And it's a great introduction in my mind for people. And this is kind of what we got into. Could you get a $100,000 portfolio and use that for a down payment on a house? Could somebody get a 5 to 7 year credit line? They pay off over 5 to 7 years. And now they own $100,000 in real estate. You're buying your down payment today, right? So that's what we want to do is there another way to build equity and build towards and get rid of this mindset that I'll never own? And also like could you rent all over New York and own $500,000 worth of real estate across the US? Yes. Who says you have to live in the home that you own?
Well, it's also interesting to me, and I'd be curious as to your thought on this. I've always found that the most stable rental markets tend to be in, I don't want to say lower middle class, but let me give you the demographic. Guy got divorced. The nurse just out of nursing school that needs to work at the hospital. There are those periods in life where and I don't know what the statistics are, 40 or 50% of people now live alone. So, the cop, the fireman, people in transition who are working people and need, I don't want to say affordable, but reasonable rental so that they can actually work and be a cop or a nurse. Do you find that to be true?
100%. What I find right now is this a generation of late 20s, early 30s, hardworking single individuals who just want to rent a room with 2 other people and want something nice that isn't some rundown landlord doesn't care, all that. And so we looked at this to go so one of your biggest expenses in real estate or in rental properties is overturn. And people don't move when you don't max out how much they're spending in rent, right? You got you got high, medium, and low. People low, they'll never move. Medium, they'll think about it. And high, they'll move in a nanosecond because there's other places to go that are cheaper, right? So we looked at this to go, like I mentioned earlier, if we can eliminate the loans, now we're not starving to try to meet a loan payment. We can reduce the rent just a little below market and keep these people in there. Now they're happier, they're everything. But going to your point, the average person lives in a single family rental property 5 to 7 years. In an apartment, it's about 2 years. So what I see, and to your point, was the families are trying to get the kids through school. They moved into this area. They're going to live there 5 to 7 years, and they're going to try. Maybe they had a credit hiccup. Maybe they had, the like you said, a divorce or whatever, and they're just trying to rebuild and get there. We also see people who move to an area for a job, and they don't want to sell their old house, so they rent while they live in these areas. So a lot of like corporate rentals or, people moving in. But yeah, to your point, I'm not going to say it's the financially illiterate, but it's more of people who just go, well, it doesn't make sense to me, therefore I'm just going to kind of,
Listen, I mean, look, the reality is in New York City right now, in New York City, the average one-bedroom apartment is $5,500 a month.
yeah, it's insane.
Right, which means you got to make $260,000 a year to qualify at 40 times.
Yeah.
And, I have lots of people that I worked with in New York, and basically they said what that has done is limited it to tech and finance guys, or people who are being subsidized by their parents. Like those are the three profiles of new moves to New York City, unless you're a corporate relo or whatever. Yep. So, I just put that out there because we used to say working class, but I mean, now someone making $150,000 a year is hard pressed to purchase a home when they're moving to a community. If they have some student loans, if they're newly married, if they got a kid on the way, they're looking to rent something quote unquote nice, but for $3,000 or less, just using the math of the 40 times the rent. So it seems to me it'd be a great market.
Yeah, and the thing in Colorado very much is it's very family oriented out here. It's much like a lot different than LA where it's, sex sells and you stay single. In New York, it's very much that same way, but it's very family oriented. And the biggest thing we see is that, homes are now $3,500 a month, $4,000 a month. Mm-hmm. And if the average income is 120, they may take home $8,000 a month. Now half of that has gone to rent instantly. And so we see a lot of it in different ways when people who have bigger families need bigger homes, and that price point has definitely skyrocketed. And the other problem becomes, do you want to be a slumlord? Do you want to provide people with nice homes? And we feel that if we can give people the opportunity to buy a fraction of the home they live in, have something that's nice, new, renovated, now it's like, hey, it's less of a burden on the owner, but it's also less of a burden on the tenant and the management company. Everybody's happy, and it's just a better experience overall.
All right, two other segments I want to do. We're going a lot longer because this is great to me. So I appreciate your time on this, Zach.
Yeah.
So how long have you guys been in business?
2.5 years. We've been building, and then probably about the last year and a half really been putting iron to the fire.
And who is your ideal client profile? Who do you love? Like who's investing with you guys?
Yeah. So investing, it's funny. We got two different sides. We got people who are building towards, giving us money to build out the actual infrastructure, and then the buyers of the real estate, right? Correct. So two different sides of that. But on the buyer side, is that what you're referring to?
Yes.
People buying real estate?
Yep.
Yeah. So we've got three primary demographics, but our favorite one is the 25 to 34-year-old that's renting or living at home with their parents. We have about 36 million of them across the United States who feel like either A, they can't own a home, they never will, they can't make this next major life move because I live at home with my parents and I'm 26 and I make $100,000 a year and I don't know what to do with my life. It's crazy. So we really want to get in there and revitalize this idea of home ownership in the US without being like, oh my God, make it cool. You got to make it fun, right? Make it cool to own real estate. And the reason we love that demographic is because then they show mom and dad that they're doing something. Mom and dad's like, I want in on this. You know what I'm saying? And then it just kind of trickles up from there. But I really feel like with real estate agents, we can offer them this product, right? Go to millennials, be the next generation of agent, and let's offer this entire, it's Gen X and millennials to go, look, this is a pathway to home ownership. Right. This is a way for you to learn and know, because we've always believed, you teach a man to fish, they'll know for a lifetime, and really focusing on that. And then it's cool too, because you get your general homeowner who wants to build and expand beyond just the house they live in without having to buy a $500,000 home, right? Maybe for $120,000 down, you can get a $100,000 credit line, right? Same concept. There's a lot there. So we like to see that 25 to 34-year-olds renting, living home. We like the mid 40s. I think you said you had a friend who's got, 30, 40 grand laying around, right. Do something with it. And then if we can kind of work our way into the retirement side of things, I think a lot of people, once they start getting into their boomer years, they're more like, I'm tapped, I'm done, I was good on all that. But hey, maybe they are, interested in playing and doing this. But last point I'll make, from a future perspective, the other conversation we're having isn't just buy these fractions to build the down payment to get into a pathway there, but also once you're in, you can keep growing. So could you build another $500,000 portfolio that brings in $3,000-$4,000 a month, and that supplements your housing. So now what you've done is over the last 30 years has built something for yourself to where you no longer have to worry about your underlying housing costs. That's being taken care of by all these other people that are doing the same thing you are. That's an economy. That's what keeps people together. And now we don't have banks siphoning off income from people through interest and all that. We still got to pay taxes, but we always will, right?
Well, I love this. Last segment here, and this is what I'm always curious about, right? I mean, my big tagline is AI turns what you love into a superpower and takes what you hate off your plate.
Yep.
And the idea is to figure out, and it's also interesting. We've been so trained that more is better. And one of the questions I always have is more of what? Because, more money is great, more deals is great, but what about more peace of mind? What about more time with your family? What about more education, more comfort, more being able to decide where you want to spend your time as opposed to just piling on another shiny new AI tool that's actually just increasing the dysfunction in your business, right?
Mm-hmm.
So one of the things that I'm curious about is, what is your process? I mean, a lot of companies have a chief AI officer, right, who's out there. And I think a lot of people make the mistake of thinking of AI as an IT issue when really it's a process issue, right? It's really digging down and saying, what specific tasks are you doing each day that AI could do a little bit better? Is it 10%, 20%, 30%? Testing, seeing your ROI, what works, what doesn't work. The danger that I find, Zach, is there's all these shiny new tools, so a lot of us feel like we're drinking out of a fire hose, but are those tools actually the tools that you need to use in your particular business? Because what I'm seeing is a lot of this off the shelf, it's a Ferrari, but really, I just needed someone to respond to my emails a little quicker, or I needed, you know what I'm saying? So what is your process for like integrating AI into your business? Who's in charge of it? Who's the person?
Yep. So we started small. We're very agile. We have a pretty strong advisory team who's built out some blockchain, built out their own chain, and a few other things. Our process and our focus on AI is going to be very slow, and it's going to integrate based on the processes that I've created. So because of my years in property management and understanding myself as a investment property owner, I feel that most businesses today haven't defined their processes, so they don't even know where AI can actually help, right? And so most companies, most people don't wake up every day and go into their insurance company and go, I'm going to reinvent how we, do this process, right? So what we're building is unique. Co-ownership isn't new, but the process that we're creating is. So what we're looking at is going, I need to get a house onto a digital marketplace. Boom, boom, boom. And then I need to follow up with these customers and management. And I need to do all these things. Once we can figure out exactly how that works, now bring in AI and start to see which pieces we can maximize. So right now we're interviewing, working on what is the best AI agent, or who can we talk to that can see our vision with us, because I am so process oriented. It's ridiculous. But I use a process called BPMN, or business process and management notation, which can help you completely identify, every process in your business down to the T. So what I would love to see is, as we build the actual ability to get a house titled, fractionalized here, great. How will an AI agent help us on that? Now, once we figured out this is how the clients and the customers are going to react and what they want, great, let's build in those integrations. I don't need to worry about tax documents for at least a year, so we've got some time to build out how that would integrate. But to me, it starts with, we're generating an entirely new process. If I bring AI in now, it may not do what I needed to do the way I want to do it.
Correct.
So let's focus on right now defining exactly how this process is going to work, and then we'll introduce the AI.
Interesting. And then I think the question is, how do you vet all of that? Right? So, I mean, this is what I'm finding. The devil is in the details, right? And I interview AI providers that's part of what I do, is I interview, And it's always amazing to me when you kind of see, okay, well, this all sounds great, but it doesn't integrate with Go High Level. Well, when is it going to integrate with Go High Level? Well, that's on the agenda for next year. So you go ahead and buy this, and now you're trying to create a Zapier or N8N to kind of, and all of a sudden it's not taking time off your plate.
Yep.
It becomes just another system that doesn't quite work.
Yep.
You've invested $15,000 in something that isn't really doing what you want to do.
Yep.
And I think that is the missing piece. The missing piece is to specifically identify the specific process that you're specifically going through and identifying, hey, is there a way to do 80% of this for $1,000?
Yep.
We don't need the $15,000. We don't need that other 20%. We just need this. Or is it worth it to get 50% of it and actually test it? So that's where I see the interesting piece in this space. Yeah. And I hear that's what you guys are doing, but you don't have that person yet because you're in the process of figuring out the process for yourself.
Yeah, when I was in the property management company, I came in, they had 43 units. We built it up to 200, right? And it got to a point where I'm like, we need to hire more people or we need to figure, and what I ended up doing was deep diving and stripping out the entire process, every document. Yep. Where does this lady answer the phone? What happens there? And I was able to go through and be like, oh my God, here, and here. And after that, I kind of blew out and left, and it was just, on we go. But I learned so much about if you deep dive, and it took me weeks and weeks and weeks and following the secretary around and the office manager and what do you do? And I was able to strip it to now, as we're building this product, this brand new revolutionary thing where people can buy, sell, trade anywhere, anytime. How is that going to work from a step-by-step process? Because come day one, when we launch, somebody calls in, the secretary needs to know what to do with that call. The next question needs to be who they hand it off to, what schedule, how do you like that? All that needs to be in place. And I feel like so many of these projects, they'll jump into it and be like, oh, this would be a great idea. Let's do it all this way. And then they realize from either legal compliance, efficiencies, it just doesn't work. And so, stop, walk through. It's like, it reminds me of McDonald's. McDonald's.
Did you see that scene on the tennis court? Did you love that? Right? Ray Kroc, when he laid out the tape, and if I turn here, I'm going to run into the guy at the fry-later. Listen, that's where it is. That is where it lives.
Exactly.
And it's interesting. So there's I listen to I love these guys. It's the AI intelligence show. This guy Paul Rotzer, and on his website, they actually have a jobs. You go and put in the job description. It will tell you what percentage of those tasks a current AI could do. So it'll say, hey, if you're a radiologist, AI can do 22% of your tasks, and here's how it will do it. And here's the interesting thing, Zach. When the next model comes out, that'll go to 31%. And then it'll go to 60%. And then it'll go to 80%. And then it becomes, how do you repurpose the people that are working for you to actually create more value?
Yep.
And I see that's what you guys are doing, is creating more value. That's where the excitement for me is in the AI future. It's not everybody's going to lose their jobs. Nope. It's how do we create more value for people and educate people in a different way.
And the big thing, too, I see is with these programs you're talking about is the local small town doctor doesn't need the everything product.
No.
And we're on HubSpot because I got a great introductory rate, but I look at this program to go, oh my God, it's so robust. There's so much stuff in here. I just need to send out mass emails and focus on my CRM, right? I'm not asking for a lot, but there's all this extra. And so I want to make sure as we approach AI for small businesses that we're not scaring away the 2-3 person firms with, did you know you could do all of this? Sometimes they're just like, I want to be able to do a couple things for my little property management company, make my $80,000 a year and manage it better. I understand, you can get investors and but I don't need all that. So we need to also come in with a very soft approach, which we want to do to the everyday layman. Here's a platform. You can see the home. It's simple. It's not NFTs and invest and quarterly and dividends and long term. No. It's just, hey, simple, easy.
It's interesting to me, Zach, even within that. And this is where, again, we go back to the human element, right? So you got HubSpot. They're introducing new stuff all the time. Wouldn't it be great if you had a AI person that knew your process so well that they could come back and say, hey, guess what? They do have this new tool in there that would actually solve this particular part of the process. We're going to now take 4% of your time back because you don't have to do X, Y, or Z. And we've tested it, and we've looked at other people who have used it. They've worked out the kinks. Because here's the other danger I see, Zach, adopting too quickly. So, AI voice agents. Okay, that's great, and some of them are phenomenal. But in the real estate space, what happens if the customer on the other end starts to use abusive language or starts to scream fair housing? And if your AI agent responds in kind or sort of goes off the rails, A, are you responsible for that in a lawsuit? B, that moment goes viral, and all of a sudden you've sort of taken on something where you haven't really thought through the implications of if this goes off the rail. So that's the other tricky thing I see is not adopting too early and not adopting too late. It's sort of being a first adapter when it's safe enough to adapt, and maybe letting some of the other people play with it for a couple of months or 6 months and see what happened. So, right? Do you see that as also?
Yeah, 100%. I think that, as it grows, as it builds, do you have outside agents? Because we've been asked this question, does building our own AI agent that trades on your behalf, does that start to skirt securities laws?
Right.
Because now I'm a broker who's making financial decisions on your behalf. Because what we're pushing is that this is co-ownership. It's not a security. There's nothing there. It's co-ownership regulated by local real estate laws, right? So, but again, if we introduce this AI agent that's trading on your behalf, right, or giving you investment advice or future projections, those are a lot of questions that we've asked. If somebody went, hey, what's the future ROI on this? Well, our platform doesn't give future projections. We can tell you based on past performance what it might be, but we have to we're skirting securities laws as well. So there's a lot of things you're talking about, 100%. If you don't build it right, if you don't test it right, like we mentioned earlier in this podcast, it was bad in, bad out, right? What data are you putting into it?
And you got to run it by an IT guy because listen, I'm a marketing sales guy. I'm not an IT guy, right? You got to run it by the IT guy. You got to run it by legal. And then does it fit within your overall vision of sort of what you want to do? So there's a lot more to it than just plugging in the latest, AI tool that sounds sexy.
Exactly.
All right. So Zach, don't leave, but I do want to ask, please let our listeners know where they can find you, how they can reach out to you directly, and how they can get involved in what you're doing.
Absolutely, Gus. So you can find us at revolvetoken.com. Or you can find us on X, LinkedIn, YouTube at Revolve Token is the hash. Check us out. We're building our wait list currently so we can stay updated with the marketplace launch and as we kind of progress over the next 6 to 8 months and hopefully become live to the public.
Fantastic. Zach, this has been fascinating. I love this, and I love the idea of taking the common guy with $1,000 and, living in his mom's house at 28 and going, man, I need to invest in real estate, and having an opportunity for them to do that and participate in a whole new way of home ownership. So I think it's fantastic.
Awesome, man. Well, I really appreciate it. Really appreciate your time and, obviously the message that you're sending out about real estate and AI, and it's a game changer, and we will see it really take hold over the next 10 years or so.
Fantastic. Well, listen, thank you all for watching this episode of Real Estate Rewired with Gus Waite, AI with a Heart. If you're interested in being on the show, please go ahead and send me a comment. And remember, when it's used best, AI should take what you love and turn it into a superpower and take what you hate off your plate. Thanks for watching. If you've got value from today's episode, hit subscribe, leave a comment. I'd love to know what you're thinking. If you're ready to turn what you love into your superpower and take what you hate off your plate, schedule your free AI discovery call. The link is in the description and pinned comment. I'm Gus Waite. Until next time.